In this video, we're going to work problem 9.8a together. 9.8a is on pages 344 and 345 of your textbook. It's work paper 295, 296, and 297. Okay, so beginning on page 344 in your textbook, it says that Cascade Company has 4 employees. All are paid on a monthly basis. The fiscal year of the business is June 1st through May 31st. The accounts kept by Cascade include the following. So the balances that are on page 344 would be the balances that ended May 31st, and you will begin June 1st with those balances. Over on page 345, it says the following transactions relating to payroll and payroll taxes occurred during June and July. And skipping down below to the requirements, it says journalize the preceding transactions using a general journal. And then requirement 2, ask you to open the T accounts for payroll expenses and liabilities. Enter the beginning balances that we just talked about on 344, and then post the transactions recorded in the journal. Okay, so we will get started. The first thing that we need to do, of course, is journalize the transactions that are given to us. So it says that on June 15th, paid $9,853 covering the following May taxes: Social Security tax, Medicare tax, and employee federal income tax withheld. If you remember those 3 taxes together, we pay by the 15th of the month following the payroll. So for May's payroll, we would make the payment on June 15th. And we pay these 3 taxes together. And if you remember, they're reported together. We call these the 941 taxes because they are reported quarterly on Federal Form 941. So to record the payment of these 3 taxes, you're simply going to debit the liability account for each tax, and then your credit will be to cash. So we'll date this, the date of the payment, 2020, and this is June 15th. Ooh, that's not writing very well. Okay, so we're going to debit employee federal income tax payable. For $3,553. And then we will debit Social Security tax payable. For $5,103. And we will debit Medicare tax payable for $1,197. And of course, the credit to cash for $9,853. sorry, I wish those numbers were a little more visible on this screen. And of course, once you make sure that your debits equal your credits, then you will write your description of the entry. So you could put deposit of federal income tax withheld, Social Security tax, and Medicare taxes, or you can simply just put made 941 deposit, because those three taxes are 941 taxes. So on June 15th, made the 941 deposit. Okay. Then moving down, it says on the 30th that June's payroll with the total wages and salaries expense was $42,000. The amounts withheld are listed, and then the net amount paid was $33,992. So they pay their employees once a month. This is the information for their payroll for June 30th. So this is the entry that we learned to prepare in the last chapter. We will debit wages and salaries expense for the total that was earned. We will credit each of the liability accounts for the amounts that were withheld, and then the net pay will be our credit to cash. So this is just like we did in chapter 8. So the date of the payroll is the 30th. We will debit wages and salaries expense. For $42,000. And we're going to credit employee federal income tax. Payable. Don't forget payable. So we're going to credit it for $3,570. We will credit Social Security tax payable. For $2,604. Credit Medicare tax payable. For $609. $609. Then we're going to credit savings bonds payable. For $1,225. And of course, our credit to cash for the net pay. And they told us that the net pay here was $33,992. And you should double check, always double check. Make sure that your debits equal your credits before you move on. That'll catch many mistakes for you. So when our debits equal our credits, we're going to write an explanation to record June payroll. Then we're going to look, it also says on June 30th that we purchased savings bonds for employees, $2,450. So we're withholding certain amounts from employees for savings bonds, and we're just holding that money, and we're going to turn around and buy it for them. It's not our money, so that's why when we hold it from them, it's a liability. And now basically what we're doing here is paying a liability. So our entry to record the purchase of the savings bonds on the 30th is going to be a debit to savings bond payable for the $2,450. And a credit to cash. I forgot the 00. Okay, and so our entry balances, and we're gonna just put purchased bonds. Purchase bonds for employees. I hope you're able to read this. The stylus just does not write very small. Okay, then we'll go back, and the next entry on the 30th says the employer payroll taxes expense for June were. So like we're learning in this book, anytime you have a payroll, there always is going to have to be an entry to record the employer's payroll taxes for that same payroll. So here on the 30th, the employer has these 4 types of employer taxes, and there's the total payroll taxes expense. We didn't have to calculate here. They've already calculated everything for us. We just have to use that information to make the entry. So this entry will also be dated the 30th. We're going to debit payroll taxes expense for the total employer payroll taxes that were calculated. And so that was $3,864. Each of the different taxes is going to be credited to the appropriate liability account. So Social Security tax payable is going to be credited for $2,604. Medicare tax payable is going to be credited for $609. FUTA tax payable is going to be credited for $84. And SUTA tax payable is going to be credited for $560. $1,258.67. Again, make sure that your entry balances, so you know you've made a mistake if it doesn't balance. And so when it balances, then we can write our explanation to record employer, I'm abbreviating, employer payroll tax. Okay? Now we'll go back and we move into July. So in July, we're paying for, on July 15th, we are making the deposit for Social Security tax, Medicare tax, and employee federal income tax from the previous month. So this payment would be for June's payroll that we just recorded. Okay, so we'll go down. In this entry, we're changing months, so we need to make a note or indicate that this is July 15. And we are going to pay those liabilities. So we're going to debit employee income tax payable for $3,570. We're going to debit Social Security tax payable for $5,208. And we're going to debit Medicare tax payable for $1,218. And of course, since we're paying all these liabilities, our credit is to cash for $9,996. Our entry balances, and so we can write our explanation. We could say deposit of federal income tax, Social Security, and Medicare taxes, or we can just simply say made the 941 deposit. Okay. All right. Coming back, our next transaction on July 31st says paid SUTA tax for the quarter, $3,402. So we are paying the SUTA tax liability for the quarter. We're going to have to move to our next journal page here. So we'll put 2020, and this is going to be July 31 is the date. And just like any liability payment, you're going to debit the liability account and credit cash. So we will debit SUTA tax payable for $3,402. And we will credit cash for the same amount. And for our explanation, we're simply going to write paid SUTA tax. And then our last transaction in this problem says on the 31st, paid FUTA tax of $658. So we'll come down on the 31st. We're going to debit FUTA tax payable for $658. And we're going to credit cash for the same amount since we're sending that money in. And our explanation, paid FUTA tax. Okay, so that is how we would record all of the journal entries. Then it asks you to go through and to post each of these journal entries that we just made. But before you can post, you have to set up the beginning balances in your T accounts. So they told us that the beginning balance in cash was $70,200. And they told us that the balance in employee income tax payable is $3,553. And they told us Social Security tax payable balance $5,103. Medicare tax payable had a balance of $1,197. Savings bond deductions payable $1,225. FUTA tax payable $574. SUTA tax payable had a balance of $28.35, and the other two accounts did not have a balance because those because this is the beginning of their year. So the expense accounts would have been closed out. All of the asset and liabilities balances would have been brought forward from the end of the previous year. So with those beginning balances, you should be able to go through and post each line. I'm just going to do the first line with you. So our very first line is on June 15th, a debit to employee insurance tax payable, $3,553. So we would go find the account for employee federal income tax payable, and we're just going to write the date of the transaction. So we'll just put 6/15 here and $3,553 debit. That's a 3. Okay, so that's hard to see, I know. That's a $3,553 debit. And then you will, this is not a normal general ledger, these are just T accounts. So normally you've got the post reference column, but we don't have that on the T accounts, but we will take the account number, so 211, back over to our journal and enter account 211 here, and so you know that line is completely posted. Then you'll go to Social Security tax payable, and there's a debit of $5,103. So we find the Social Security tax payable. We're going to again write the date, so that is 6/15 for this transaction. It was a $5,103 debit, and then since it's T accounts, we're not computing balances. We'll do that at the end. So we'll take this 212 back to the journal page and put it in the post reference column. So that's what you'll do to finish this problem, is continue posting all of the transactions from both of the pages both of the general journal pages, and that will complete the problem. What they really want you to see is how the liabilities are accumulated one month and then paid the next month for federal income tax, Social Security, and Medicare tax. But then for the federal unemployment and the state unemployment, those are paid, state unemployment is paid quarterly. Federal unemployment, if you remember from the chapter, is paid when the liability is over $500. Okay, so that should get you started and help you work through problem 9-8A.